U.S. Treasury quantitative easing, because you're effectively buying treasuries with printed money. That's very positive for dollar liquidity. I think that the 4-year Bitcoin halving cycle and sort of the minor profitability and how that swings over time made a lot more sense in terms of a market cycle when Bitcoin was a much smaller asset class, and I guess in crypto in general, because if Bitcoin goes, everything else follows. But now that Bitcoin and crypto are a bona fide asset class, they're talked about in every major financial network in the world. Every central bank has an opinion on it, whether it's good or whether it's bad. You have the leader of the empire of the US talking about Bitcoin and policies, and everybody's responding with that sort of stuff. So now I think Bitcoin has transitioned from this sort of technological digital bearer asset into the best smoke alarm for fiat liquidity that we have globally. Previously, that role was held by gold. Yeah, gold and Bitcoin have some different properties that make them react a little bit differently to things. And now I think we have a 24/7 market. Anyone with an internet connection can access it. And it's really just driven on fiat liquidity. So as I've broken it down in my essays before, I break down Bitcoin's price value as, on one hand, it's technology. On the other hand, it's fiat liquidity. And so in the beginning of Bitcoin, there's a lot more technological change as sort of the ecosystem was building, and sort of technological developments were much more rapid. These days, the amount of change that happens at Bitcoin core is quite small, and obviously it takes a long time for the community to coalesce around how they want to change things. So the technology piece is pretty standard. There's a number of wallets that are getting added to the network at some rate over time. It's not anything magical or crazy. And so you can kind of forget about the technology piece. It works. And so whatever. It's really about fiat liquidity. How many dollars, euros, yen, yuan are being created and destroyed? And that's going to make its way into what we think the price of Bitcoin should be right now and into the near future. And so that's why I focus entirely on liquidity. All I care about is fiat liquidity. And yes, the stock market and Bitcoin can move, in tandem or not in tandem because of these conditions, but stocks have other things that decide the value, specific companies, earnings multiples, all these other things, right? Bitcoin, we have none of that. As long as we believe it works, then it just comes down to how many fiat things are in the denominator, and then you just get to the price. So I think, post the Trump victory, Bitcoin obviously had a stellar rise from 70 to 110,000. People expected all these great things. And I think a lot of this, we're going to have all this money printing and all these sorts of things are going to happen. And I think the pace of credit creation disappointed expectations. And that's why we had this pullback from 110,000 to, we got to a low of like 76,000 last 2 weeks, whenever it was. Yep. And I just put out a tweet earlier today. I've been doing some analysis over the weekend and listening to various folks. I think, obviously the United States is the most important barometer of credit creation globally. Everyone else sort of reacts to what's happening in the US. Yep. And I think there's a seminal change in the tone of Powell at the last Fed board meeting where, prior to this, he was pretty antagonistic towards Trump. I'm staying, I'm independent, inflation, we're going to fight it. Don't fucking talk to me about interest rates. I'm going to do my own thing, right? Yeah. I'm here to solve inflation. Shut the up, Trump. Like, I don't care about your policy goals. Then in this press conference, there's a complete change of tone. Number one, they are going to decrease the pace of quantitative tightening, meaning they're going to let less treasury securities roll off their balance sheet, which is a bit curious because number one, inflation is still above their target. So core PCE is the inflation targeting. I think it's a bullshit metric, but whatever. It's the one that they look at. It's above 2%. Stocks are at all-time highs. Maybe they're 4 or 5% off the all-time high, but still all-time highs. Unemployment, all-time lows. Real GDP growth, stellar in the United States. And the balance sheet is up over $3 trillion from COVID. And the whole point was, let's remove this credit from the system to stifle inflation to help the average American. And yet at this press conference, when the American economy is on, in all sort of ways you can look at it, doing very well, saying, I need to reduce the pace of removing the thing from the system that's caused all this harm to the average American. That's a bit strange. And then he went on to say, we think that possibly we could allow our mortgage-backed security runoff, which is about $35 billion a month, to be negated by buying $35 billion a month of treasuries in the near future, right? So that's, MBS QT U.S. Treasury quantitative easing, because you're effectively buying treasuries with printed money. That's very positive for dollar liquidity.